Hi friends, good afternoon. My name is CA Rohit Upadhyaya, and the purpose of this presentation is to help out CA aspirant, especially the CA intermediate examination, how to effectively tackle, how to strategize their uh, studies planning, and how to successfully clear the examination. So first, let me introduce myself. My name is CA Rohit Upadhyaya. I qualified chartered accountancy in year 99, followed by law year 2000. From perspective of profile highlights as a teaching faculty, I have been rather, associate professor of the IMT Ghaziabad for year 2001 to 2008, teaching financial management. Currently, I am visiting faculty of ICAI, Delhi, Ghaziabad, and Kanpur branch. Last 4 years, teaching the following subjects: in CA Final, financial reporting, strategic financial management, advanced auditing and professional ethics; in CA Inter Accounts, corporate and other laws, taxation and financial management, and economics of finance. Since last 7 years, I have been evaluator of answer sheet, all subject of both CA Inter and final examination. Therefore, understand the examination pattern well. So first of all, I would explain normally what challenges are being faced by the CA aspirant. First of all, they belong to different backgrounds, like few have cleared foundation courses, few are commerce graduate, science graduate, ICWA, CS Inter, or resulting in lack of focus on important portion of studies, or they have too many expectations without proper planned studies, taking the initial graduate examination as a basis. Second challenge is there are a lot of students appearing in Hindi medium and majority lack expressing themselves properly in English writing as well as vocabulary. Third is from the inception, focus on selective studies, not keeping the main focus on the complete study of the ICAI study material, previous question papers, and revisionary models. Fourth is not paying attention to CA Journal, incorporating latest accounting standards, or diet or indirect taxes, new budget provisions. What I observed, normally 25 to 30% of these two question papers are focused on new amendments only. Another important thing, not dividing syllabus in priority and non-priority section, that is known as ABC section. Not reducing various modules of study material in form of notes, citing relevant sections of that. I believe that is really important. When you're writing the corporate laws and the other laws, you have to specify the section also to make revision quite handy and good marking in the examination. Not indicating calculation sheet is stepwise solution to numerical accounting questions resulting in reduced mark. That is what I have observed as a normal tendency. Not paying attention to balanced study in each subject. CA passing requirement, since it is minimum overall 50%, each subject it is 40%. Does not practice on improving quality of the answers furnished. In this regard, verifying previous CA exam solved answers and adapting mock test papers are handy. So whatever the challenges I have indicated, they are going to provide solution to all of them. Obviously, we will take care of the student who do not understand English properly. Hindi speaking student, that is one aspect. Obviously, we will ensure the comprehensive study coverage. Plus, it will be followed by self-assessment test. Obviously, the revision of the previous test papers also. And during the course of the session also, normally it will be 1 hour period session. So 45 to 50 minutes will be devoted basically to explanation section or the presentation section, followed by 10 to 15 minutes of the question answer section. After the completion of each session, relevant material being presented online will be forwarded to the concerned student in soft copy. And after the completion of the relevant chapter, obviously we are going to share, rather ask the questions from the student to verify their capabilities. We are looking for completion of each subject in 22 basically lectures or session. Then it will be followed by basically going through the previous question paper from 5 to 10 years. That will be really handy in preparation of the current examination. Then obviously, then we will focus on major areas normally which are score marking, and normally the CA paper or exam paper subject wise consist of. Now basically when I consider CA intermediate group wise examination, actually it has two groups into consideration. Paper 1, it is CA intermediate accounts. We are taking due care of, and the facilities available for online session. Second is the CA intermediate corporate and other laws. That consists of Companies Act consisting of 60 marks and other laws, that is 40 marks. That also we are going to take care online as a separate subject. Then paper 3, that is CA intermediate cost and management accounting. Obviously that also we will cater to all the students. Paper 4, it is CA intermediate taxation. So basically it consists of income tax law and GST as in direct tax law. Obviously that also we are taking care. Group 2, we have advanced accounting. Obviously we will be teaching that as a separate subject during the separate section and the batch for the student. Paper 6 or the group 2, it is auditing and assurance. That also will be taking care. Then paper number 8, financial management and economics of finance. That also we are taking care. Only one paper, paper 7, enterprise information system and strategic management. We will not be teaching during the course of online studies. So the highlighting feature us is it is a full blown solution for the student. Out of 8 both groups papers, we are catering to 7 papers on the basis of the online studies. So I think that is really relevant. Another thing what basically we are going to pay due attention is that obviously the method teaching will be pictorial presentation also. We'll try to incorporate everything at a single place and in a suppressed manner so it can be easily understood to the student. So in this regard, I will ask permission to actually share one presentation regarding the financial management. So that is known as basically the working capital management, and it is a working capital cycle, which is also known as operating cycle of business or the cash conversion cycle. So as I already told, to explain the things by means of diagram, it is very easier to explain the things in a form of diagram. You can see the operating cycle. Now here you can see is there is a cash of business. On the basis of that cash, we are going to make the purchase for forthcoming sales. So when we are purchasing the raw material, so in that case, what is going to happen is obviously the accounts payable will come into consideration. Then this raw material will be under production process. That will result in work in progress. And when the work in progress is completed, we will have the finished goods. So this is the full cycle of the inventory when we are talking about. So it consists of raw material inventory, work in progress inventory, and finished goods inventory. So when the finished goods are ready or inventory, it can be in 2 forms. They are products which are saleable in behavior, and the other product which have been damaged or that is sales return. So maybe they have to be reprocessed under production, or basically they need to be sold to the customer, maybe at discounted prices. So when we are making sales here, it will result in creation of the account receivables, and obviously the determination of the credit payment or the credit limits for the various customers. So on the basis of that, whatever the credit limit is being given, that result in realization income, and ultimately it is again converted to cash. So the entire process from basically cash expenditure in the purchase of the raw material, ultimately to the realization of money from the debtor, that is known as the cash conversion cycle or the operating cycle of business. To make the things more in a more explainable manner, now, working capital cycle, it means the time it takes to turn the net current assets. So when we talk about the net current assets here, so obviously it is the account receivables and the inventory, and current liabilities into cash. So current liabilities here means the accounts payable. So obviously what company used to do is they will prefer to reduce the working capital cycle by first of all collecting the receivables quickly, or stretching the period of the accounts payable, that is also known as sundry creditors. So now normally how we define the working capital, so that is current assets minus current liabilities. If the current assets are less than current liability, then obviously we can have a negative working capital also. So positive working capital, it is required basically for any company and firm to have sufficient fund to ensure that we make payment of a short-term debt. Short-term debt means the debt having a liquidity period of basically 12 months or less, and obviously the upcoming operational expenses also. The working capital is of the management involves, obviously we have to manage the inventory in terms of the above, actually the operating cycle what I have shown upstairs, account receivables and payable and cash. And as I have already explained, working capital means when we reduce current liabilities from the current assets. Now, basically, in order to explain the thing further, what are the component of current assets and current liabilities? So what is the meaning of cash and cash equivalent when we talk about? So cash means actual cash, that is hard currency. It can be coin, it can be money order and petty cash. It can be cash equivalent when we talk about. So obviously it can be short-term government bond or treasury bills or liquidable marketable security. So that is a part of current assets. Obviously account receivable, that is also one part is known as sundry debtors. That is also current assets. Inventory is also current assets. And the accounts payable when we talk about, so accounts payable that also indicate the sundry creditor, that is a current liabilities. Now, management of the working capital, how we can manage working capital properly. So obviously effective cash management, that will ensure that we reduce cash handling cost. Obviously inventory management, because it is a essential part of the operating cycle. So we have to keep inventory at the reasonable level, whether it is raw material or of the finished goods, to ensure that we minimize the reordering cost, and as well as to ensure that we avoid overproduction also. Then effective data management, identify the appropriate credit policy, credit terms which attract customer, which will have impact on the cash flow, maybe appropriate discount policy, which will have an impact on increased revenue. Then obviously we can think about the short-term financing also. One way is obviously to extend the period of the creditors, that is one way. But in few cases, we have to depend upon bank overdraft also, or we can convert actually the account receivable to cash via some system like factoring, discounting of the debtors or something like that. Now we talk about the working capital cycle formula. So how this working capital cycle consists of, and I think this is a really important thing. So it is average payable period. Average payable period means that is the inventory period we are talking about, plus average collection period, that is a receivable collection period we are talking about, minus payable payment period, that is a creditors and accounts payable period. So when we calculate on that basis, we can find out the working capital cycle in terms of period, Now, alternative method of calculation below. Obviously, first of all, for debtors or the receivable, we have to find out the receivables turnover. We have to bear in mind normally number of days in a year we consider 365 days only. So formula is receivable turnover, that is revenue during the period, and that is average account receivable. So average account receivable, obviously the receivable at the beginning of the period plus receivable at the end of period divided by 2. Then in order to find out the days sales outstanding, DSO, that is, you can say the receivable period, account receivable period. So days in a period, that is 365 days divided by receivables turnover. Then inventory turnover, important thing is in the receivables turnover, we take the sales into consideration, revenue into consideration. But we have to bear in mind for the inventory turnover ratio or for the accounts payable, we will take cost of goods sold and not sales as a criteria. So inventory turnover, it will be the cost of goods sold upon average inventory, same basis like account receivable. And inventory days, it will be days in period, that will be 365 days upon inventory turnover, the way we have calculated. Then accounts payable turnover, again, it will be cost of goods sold upon average accounts payable. Then payable payment period is days in period, that is 365 days normally, upon average payable turnover. Then we talk about the operating cycle. So what is the meaning of operating cycle? So what is the inventory days, for processing that thing? And to what extent, the account receivable period is there, days sales outstanding. So cash conversion cycle is simple. That is operating cycle minus that is accounts payable payment period. So hope you have found this presentation helpful. Feel free to contact us. We are for you only, please. And we will try our best. And let me just try to share one highlight in that regard. In the last examination, in terms as a faculty, my result in CA final, it was about 37 to 38%. And in CA intermediate, it was 29%. And I'm looking forward to see you soon. And since we are going to start our online session very soon, and any query, any question, kindly feel free to contact us, and we will really ready to help you out. Thank you. Take care. God bless you. Goodbye.